What's up guys, Tino here. Credit is one of the most important things you need to understand if you're trying to be an adult. It affects you when you're trying to purchase a house or a car or even simple things like getting a new phone or signing up for an account at Mr. Price or Edgar's if it's gonna survive the lockdown, that kind of thing. You would think that such an important subject would be covered in high school or in primary or university, but here we are. This is the first of a series of videos I'm going to be releasing over the next couple of weeks, focusing on credit. What is it? What do you do with it? Do you eat it? Do you give it away? That kind of thing. Okay, intro. In simple terms, credit is the ability to pay back the money. In second year, I met a guy in a society club I was part of, and this guy was super sweet, soft-spoken, like he was generally a really good guy. Let's call him the rabbit. After the end of exams in the first semester, in second year, this guy came up to me and asked for money, for 200 rands, and it wasn't that much money. And most importantly, I didn't need that money at that time. I think I only needed it in the next couple of weeks. And he said he was gonna pay me back the following week. So I was like, okay, no, it's fine. Go ahead. I understand the struggle of being a Zimbabwean in this foreign country of Cape Town. When I gave him that 200 rands, I trusted him. I believed there was a very good chance he was going to pay me back that money the following week. Maybe 2 weeks later, worst case scenario. I assumed the rabbit had good credit. A week later, hey fam, when can I expect my money? Dude responds, hey man, my money isn't in yet, but I'll let you know as soon as possible. I was like, okay, fine. It's only been a week anyways. My dumb ass still had faith in him. 2 months later, and I'm super broke now. Hey fam, hey, I haven't forgotten. I've written it down in my book of creditors. Book of creditors. Yeah, by then I knew that money was not coming in. From then on, I would only message him when I was broke, eh? And back in varsity, I had 3 levels of broke. Level 1 is, when my current account, my checking account gets below a certain value, that's essentially my emergency fund. And then level 2, broke, is when that emergency fund is gone and I have to dig into my savings. So whenever that happened, I would start thinking about people who owe me money, and he was always the first person. Sad in varsity, the rate at which I hit level 2 brokenness was quite high, eh? So over the course of a whole year, I got to experience a wide variety of excuses from the rabbit. It turns out the rabbit has bad credit, and it took me having to lend him money for me to find out that this dude has bad credit. Now if the rabbit says hi to me on the streets, I'll just respond, no, God, please, no! Because I know straight away this nigga cannot pay me back my money. What if I was a bank and the rabbit is a client who came along to borrow some money from the bank? The bank is in the business of lending people money. That's what they do. You go to the bank and borrow some money with the expectation that you're gonna pay them back in a couple of weeks, months, or years, with a little bit of extra on top, interest. That's how they make the money, it's interest. You need to have good credit to borrow money from a bank. If the bank doesn't believe that you're gonna be able to pay back that money, in other words, if you have bad credit, then they're not gonna give you the money. That's bad business. Either they won't give you the money, or if they do choose to give you the money, it'll be very expensive. They'll give it to you at a very high interest rate. But how would the bank know that you have good or bad credit? They can't use my approach to give you money and then figure out if you're gonna, pay it back. That's bad business. What if we could measure someone's ability to pay back the money? What would you call that? And that's what a credit score is. It's basically a measurement of the ability to pay back the money. In South Africa, most credit scoring platforms use a scale between 0 and 100. It's not linear, and it's also not consistent because other scales use a scale between 350 and 850. Sometimes it's between 0 and 700. It's wild out there. However, what you need to understand is whether or not your score is good based on that scale that you're using to measure. Although there's lots of websites and apps and platforms you can use out there to get your credit score, there's usually a much bigger company in the background that actually does the calculations. In South Africa, 2 of those big companies are Experian and TransUnion. So usually what happens is when you apply for a credit card, for example, let's say from FNB will then forward that activity to the credit reporting companies like Experian and TransUnion so that they can take that into account when they're calculating your credit score. The FICO model is the most common algorithm that's used to calculate your credit score, and it's actually the same model that's used by Experian, TransUnion, and pretty much all other credit reporting companies in SA. Out of 100%, this is how the FICO model breaks down your credit score. Payment history. This will account for 35% of your credit score, and it takes into account how often you pay your bills on time. These bills include your credit card, your clothing store accounts, your cell phone bill, those kind of things. If you miss your payment, then you're gonna hurt your credit score. And the more you miss your payments, the more you're gonna hurt your credit score. Amount of debt. This accounts for 30% of your credit score, and it takes into account the amount of money you have borrowed compared to the amount of money you are able to borrow. So let's say, for example, you have a credit card and that credit card has a limit of 10,000 rands. If I continuously max out that credit card, then a bank would take that as a sign that, maybe I overspend a lot and I rely too much on debt, and that is a sign of bad credit. We're gonna dive into that a bit further in future videos, so don't worry about it if it's a bit vague. Credit history length. This contributes 15% towards your credit score, and it takes into account how long you've been borrowing money. The longer you've been borrowing money, the higher your credit score. Amount of new credit. This will contribute 10% towards your credit score, and it takes into account all the different accounts you've recently opened. Credit accounts, obviously. So for example, clothing store accounts, cell phone accounts, car loans, home loans, that kind of thing. This also takes into account the number of hard inquiries you've recently had. We're going to discuss hard inquiries in a future video, so don't worry about that. The more you have, the lower your credit score. Credit mix. This will contribute 10% towards your credit score, and it takes into account the variety of credit that you have. The wider that variety is, the higher your credit score. The types of credit I'm referring to here are clothing store accounts, credit cards, home loans, car loans, that kind of thing. So those are the 5 different categories that companies use to calculate your credit score. Unfortunately, they don't share the actual formula they use. So, a credit score isn't something you can calculate by yourself. However, there are plenty of free platforms you can use to get your credit score. I've left a few in the description, so make sure to check your credit score after this video. If you're wondering what happened to the rabbit and my 200 rands, make sure to check out my next video where I'll be discussing why you need to know your credit score and why it's important to make sure it's a good credit score. Until then, you can check out this video here. YouTube is confident you're gonna like that one. If you watch that one, maybe check out this one here or this playlist for this series of videos. If you watch all this content, maybe click here to subscribe, and I'll see you next week. Okay, you have a good day.